Holy smokers, this ain't no dang jokers. We have so much going on out there, folks. So I went ahead and took a bunch of profits on my Walmart put options here today. Those ones appreciated greatly. I mean, if we're talking, they were up like 50% here today. And even off of the back of that, Costco put options that I have as another hedge exploded upward. Those were up over 20 percentage points here today. Meanwhile, Palantir stock is going through a little bit of a tough time in the short term. I posted this on X here today. I said down to my last 1,308% gain in Palantir. It's getting rough out there, folks. Celsius stock exploding 30% to the upside after hours. You got to be flipping my flapjacks. Two subjects I want to cover in today's video, okay? First subject is Walmart and Costco, my put strategy, my hedge strategy. Where do I go with that from here? I took half my profits essentially in regards to Walmart today. What am I going to do with the other half? How much longer am I going to wait to take profits on those? And then Costco, like what's the plan with my Costco options there, which is around, what is that, $17,000, around $17,000. So what's the plan there? I'm going to discuss that at the beginning of this video, okay? And then second thing we'll discuss is if you have $1,000, I want to give you 4 great stock opportunities that have insane upside potential ahead, okay? And so we'll speak about that. We'll get into all that in this video. It's an action-packed one. I appreciate y'all joining me. I hope you appreciate me taking the time out of my day to record this video for you guys. As a big sign in my garage says, I need you guys to hit that like button. That's all. If you could just do that for me, that's all I need from you, okay? I appreciate y'all being here. Additionally, if you want to subscribe to the channel, you can certainly subscribe to the channel, which by the way, the car, man, the Roma, I'm falling more and more in love with it as I've owned it, which I'm coming up on 6 months or close to 6 months now, man. I just think it's a beautiful car, okay? All right, guys, if you need any help from me, you need to join my private stock group, private wealth group, 1000xstocks.com. You want access to all that, you're ready to take things up to a higher level, get access to all my premium courses. That will be pinned comment down there today. You can click on that, fill out a form. We'll see if we can get you access to that either this weekend or maybe you could join us in the private group maybe next week, something like that, okay? Alrighty, right off the bat, very important we discuss this, okay? Walmart. So Walmart put options obviously exploded to the upside here today, right? Which, by the way, I'm trying to fix my phone a little bit here. It's being a little bit funky. There we go. Okay. So, you know, this is what I have left now. I have 35 contracts left. That's around $9,200 and up 42% on the puts I have left here. So I have that along with the Costco, right? And I still have all of my Costco put options, just to be clear about that. All 14 contracts around $17,000 worth. And yeah, that was a crazy move here today off the back of just, a 2% move down for Costco or so. But we'll speak about why that happened. So in regards to Walmart's income statement, it wasn't bad. I graded it a B-, and honestly, if it wasn't for one-offs, it would have been like a B+ income statement, like very respectable numbers. Revenue was up 4.1%. If you look at operating income, that was up a very nice 8.3%, right? And then net income and EPS would have been up if it wasn't for kind of this weird year over year where they had essentially an $813 million benefit versus a $294 million loss as like a one-off. That's over $1 billion of differential there. So that caused the net income and the EPS to be down on a year over year basis, but the reality is it's a little better than that. So it's not like this was some bad, like disastrous, like report for Walmart or something like that. No. And I never, in terms of my bet on Walmart, it's not like I'm betting against Walmart as a hedge because I believe the company's going to fail or something like that. Like, no, of course not. Like Walmart's a beast. Like they're going to keep putting up their numbers. Like people shop at Walmart. It is what it is. It's been the same thing for 40 years now, right? This is why I entered this hedge in the past week. Is Walmart valuation has just gone ridiculous. And so it's gotten so priced to perfection that anything goes wrong, any little negative thing, and that stock goes down significantly, right? And the implied volatility on this earnings move was 5%. That's not normal for Walmart. But here's the deal. If you can, one of the beautiful things I love about 1000xstocks.com is I can compare 3 stocks against each other, right? So if I compare Walmart versus Meta versus Google, right? Keep in mind, Walmart has not even close to as good of a business model as Meta and Google. Like Google and Meta's business model is a night and day better business model than Walmart. Anybody would gladly, any Walmart executive would gladly switch places and have a business model like Meta and Google. Like those are straight profit machines. Walmart's trying to, move massive quantities of product all around just to make a few pennies on it, right? And Meta just sits back and just massive billions and billions of users use the products and they just get to make all that advertising revenue. It's like, so easy, right? But here's the deal. Walmart trades at a trailing 12-month PE of around 40 versus Meta's around 29 and Google's around 23. right? Forward P, Walmart's at around 36 versus Meta's around 26 and Google's around 20. So you're paying a far bigger premium for Walmart versus Meta and Google when the business model sucks compared to those other two companies. It doesn't make sense. But if we want to take it one step further, you can say, well, what if Walmart's growth rates are going to be way better than Meta and Google? That's not true either. If you look at next year's revenue growth expected here, Walmart's a little under 5%, right, in the 4% range. Meta's around 17% expected, and Google's around 14% expected. So you get worse growth and a way worse business model. Something has to give. The valuation's gotten ridiculous in regards to Walmart. And so what happened in reality is this is what happened. Walmart CFO said the company wouldn't be immune to looming tariffs from Mexico, Canada, right? And then even though the company saw strong growth in the e-commerce business, it also warned that profit growth is going to be slower for the fiscal year. It's all it takes. It's not like Walmart had to announce like, oh, we're going out of business. Like, oh, no one shops at Walmart. No. None of that had to happen. Just like, oh, profit growth is going to be a little bit slower. And yeah, if those tariffs come on, we're not going to be immune to it. We might get hit a little bit. That's all it takes. A little negative commentary. And stock goes down a bunch, right? And I believe is the worst stock in the Dow Jones Industrial Average here today. That's all it takes. And, it reminds me a little bit, this is a problem when you're talking about stocks that get priced to perfection. And another great example is Palantir here recently, right? Palantir valuation, I've been speaking about on the channel, has gotten to such ridiculous levels, right? That anything that could be seen as scary or worrisome or whatever was going to cause that stock to get hammered, right? And I've been talking about that on the channel for the last several weeks, right? Including a video I did a couple days ago. And sure enough, yesterday, all of a sudden the Pentagon says, budget might get cut 8%. Trump wants to cut the budget 8%. And then we hear about, Alex Karp might sell $1.2 billion of stock in the next 6 months, which isn't actually that much when you consider it next to a market cap that's well over $200 billion. But the moral of the story is that's all it takes. And the stock obviously plummeting. It was at, $125 a share just, 48 hours ago or so. And now it's at 104. It's lost $20 plus a share on that stock in snap of fingers. And I wouldn't be surprised if it actually loses some more short term. That's all it takes. When you're priced to perfection, all it takes is a little bit of weakness. Anything goes wrong, and boom, your stock gets absolutely hammered, right? That leads us to Costco. So in regards to Costco, their latest numbers they had reported for the January month. So basically they announced monthly sales results, okay? This is very important. And their monthly sales results have been banger. Like total company revenues up about 7.5% or comparable sales up about 7.5% versus up 6% on 22-week. So basically, Costco's business model has been in a strengthening period where it's strengthening, right? E-commerce has been already starting to slip, so we are seeing some weakness there where the 22 weeks was up 16.6%, but on a 4-week basis up 13.6%. So we're already seeing a little sign, a little tell of like e-commerce weakness there, right? If when the February numbers come out at the beginning of March, right, they should come out in the first week of March, if suddenly we're in a situation where, for whatever reason this number slows, don't be surprised if Walmart stock gets crushed. Or excuse me, Walmart stock, Costco stock gets crushed that next day, essentially. And if you exclude gasoline prices, right, then sales have been up 9.8% recently. If all of a sudden they come in at 8%, 7%, it's still a really respectable number, 6%. That would be still very good. But all of a sudden it would show a deceleration of growth. And when you trade at an extremely rich valuation, it's all it takes to get hammered, right? And so Costco's in a tough position now where they have to come in with better growth. So now this next one, they're going to have to come in with like 10% comparable sales up on a year-over-year basis. I mean, the numbers are just going to start to get ridiculous for Costco to try to beat these, right? And you want to see where Costco's valuation is? You thought Walmart was high. You ain't seen nothing yet. Let me show you Costco. Costco, trailing 12-month P is 60 versus 29 of Meta and 23 at Google. The forward P on Costco is 55 versus Meta's 26 and Google's 20. Who is a better business model, Costco, Meta, or Google? Anybody that knows anything about business will tell you Meta and Google all day, and it's not even close. Not even close. Costco's business model is tough as hell. Tough as hell. They got a million competitors, and it's just a brutal business model to make a few pennies, right? If you look at revenue growth of this company, You're looking at 8 to 9%, somewhere around there, maybe 9% for this year expected, versus Meta's around 17% and Google's around 14%. So Costco's just extremely richly priced. And if they have anything come out that's negative, the stock's going to get crushed. And those put options will appreciate massively. They have to come in with perfection on perfection on perfection. Like everything at this stage for Costco has to be perfect. If they have one comment that's a little off, if they have one number that's a little off, boom, stock's getting hammered, right? Now, their earnings are coming out Thursday after the bell, not this coming Thursday, the next Thursday, okay? The 6th of March. And so that's going to be really interesting, and then we'll also see the comparable sales numbers as well, right? Now, what's kind of my plan in regards to Costco? Here's the deal, okay? If this stock, if I can make 50% plus before earnings come out and before the comparable sales come out, I'll take half the money off the table. And I'll just be riding with house money, essentially. So right now, we're up about 19%-ish so far. But like I said, if Costco continues to weaken, let's say this Walmart malaise that's going on out there, let's say that continues to affect negatively not only Walmart but Costco over this next week or so, and let's say Costco stock just continues to weaken into earnings and people start getting a little fearful about, well, Walmart just said this and this and this, that means Costco's probably going to say this and this and this. And remember, once again, when you got a very rich valuation, people get concerned very quickly, right? And so next thing you know, suddenly Costco's in a situation where, their stock can't win and just keeps going down, and those puts would appreciate obviously massively. And so if that situation happens, I'll take half the money off the table before earnings and probably keep the other half into those earnings essentially, right? And if you've been trained under me, if you're part of my private stock group, right, what do I always tell you guys? Very important everybody understands this. You got to be greedy with your longs. So when I say greedy with your longs, like if you're buying into a stock, you have to buy into that stock expecting to make 2x, 5x, 10x your money, right? Otherwise, it wasn't worth your time to invest into it. It's got to be an opportunity that the company has enough growth over the coming years that you can see how you can get the valuation to come up substantially and double up your money, triple up your money, 5x, 10x, whatever, right? And so you can be greedy with your longs because you have time on your side. You're not in a rush to get out of those, right? You can hold a long position for 3, 5, 7, 10 years, however long. Take it to the grave, right? Hedges don't work like that. And so if you've been trained under me, I always tell you, like with hedges, I don't like to be greedy. Like if I get to make a bunch of money in the short term, like I got to make, those Walmart puts being up 50% here today, I took half my money off the table. I said, that's fine. Like I just put on that hedge, what, a week ago? Like literally, I don't even know if I've had that hedge for a week. And to already make, that sort of money that quickly, it's fine with me. And then I'll let the other half ride a little bit. If Walmart continues to weaken over the next, few trading days in the next week, I'll take the rest of the money off the table. And that's fine with me. Like if you give me 50% on my money in a week, 2 weeks, 3 weeks, that's fine. That's fine. Hedges you don't want to get greedy with. And the reason being is it's too risky because you're usually playing with time decay. For me, I'm playing put options here, right? I have time decay. That's all till August. So, if things can really go my way in the short term, I'm fine with taking a bunch of profits now. That's fine. And then somebody else can worry about trying to make more profits on that. I'll sell those options off to somebody else. Let them worry about trying to make the next bit of money on that. I'm fine. If you could tell me I could make 50% in a few weeks on a hedge, that's cool with me, man. Like, sweet. Like that worked out very well for me, right? So be greedy with your longs. Don't be greedy with your hedges. You get chances to take incredible profits, right? And for everybody in my private stock group, always keep in mind under the Portfolio Management Mastery course, I have a video that's very important I want you guys to watch at some point in time, right? This is very important if you're a little higher net worth individual, certainly. It's this video right here. It's a 44-minute video I did in the private group called Hedging a Portfolio Masterclass. Definitely one you're going to want to check out at some point in time, okay? Alrighty, next subject up here. If you have $1,000, 4 great stock opportunities that have insane profits to be made, okay? Well, the stock that was supposed to be number one of these 4 stocks that I had planned for this video, because I had this video planned for like over a day, was supposed to be a company named Celsius Holdings. Now, my hope was Celsius was going to be flat on the earnings or go down. That's what I was actually rooting for. Yeah, that's not happening. Celsius is up over 30%. With that being said, Celsius is still a buy, and it still has insane gains ahead for this stock. So even though it's up a ridiculous 30% plus after hours, it's still a buy. It's still a buy. Remember, this stock, not that long ago, I'm talking less than 12 months ago, this stock was $100 a share. So at $33 a share, it's still got a long mountain to climb to be back where it used to be. And do I think Celsius will be a $100 stock again? Yeah, I do believe Celsius will be a $100 stock again. I don't think it's happening this year, but I think it will happen in future years. Well, Celsius will get back to $100 and then eclipse that, right? So we're climbing that stock's climbing a mountain back. Now, so for some of us that have been just buying the stock very recently, we're looking really freaking good. Are we not? Are we looking good, right? No, as far as just their headlines right off the bat, they're flexing all over the place. Retail sales increased 22% year over year for the company. They grew market share 160 basis points, which is just a fancy way of saying 1.6%, right? To 11.8% they ended the year. Now, additionally, they announced this massive acquisition. Alani? I can never pronounce it right, okay? Alani. We're going to go with that, okay? And so they bought this energy drink brand, right? And we'll get into that in just a moment and some very, very interesting things I dug up in regards to this company, okay? So now in regards to Celsius's income statement, it sucked. But here's the thing. Everybody knew it was going to suck. This caught no one by surprise. No one that's investing in Celsius thought this was going to be a good report. We all knew this was going to be like a trough type garbage, income statement, and it's going to get better from here. And that's exactly the way I view it. 2025, the results that Celsius is going to be reporting is going to get better and better. Like Q1 is going to be the worst quarter for 2025, in my opinion, and it's going to get better in Q2, better in Q3, and better in Q4. So the income statement sucked, but honestly, a lot of it came back to that Pepsi comp on a year-over-year basis, which was just brutal comp for them to go against, essentially, where Pepsi bought up way too much inventory at this time last year, right? But the important thing I thought was actually worth mentioning in regards to the income statement was they were able to grow their gross profit despite the revenue being down $15 million year over year. So what does that tell you? When the revenue turns back positive again on a year over year basis, which is probably as soon as, in the next quarter or two, we're going to see that gross profit explode to the upside. If they could grow gross profit while revenue went down $15 million, what do you think is going to happen when their revenue is going up $15 million and up $20 million and up $30 million? Watch that gross profit, baby. And that will obviously help the overall profitability of the business immensely, right? Additionally, when it came to that income statement, it had a bunch of kind of, things that affected the GAAP numbers, the generally accepted accounting principle numbers, that if you look on a non-GAAP basis, it's not as bad as it looks. Stock-based compensation was 5.9 mil. Foreign exchange was 1.3 mil hit. Legal settlement cost was a $54 million hit. Reorganization cost was around a $6 million hit. Acquisition cost was around $2 million hit. And then penalties was around 9.3 million, right? So their non-GAAP adjusted EBITDA margin was actually 18.9% versus 18.8%. So that is something worth mentioning there, okay? Now, this Alani company, Alani, we'll call them Alani, okay? So a lot of men have not really heard of this brand before, and the reason being is it's very popular with females specifically, right? It's a very heavy female energy drink base, okay? And I understand 90% of the people that watch my channel, you might be aware of this brand, you might not. But it was fascinating because I was kind of watching like what people were saying about Celsius on X after the announcement came out to buy this company for $1.8 billion. And everybody was like, on X, everybody's like, oh my gosh, worst management team ever. This is so stupid. How can they mess this up? Because initially the stock was going down. The stock went down to like either $23 or $22 after hours. And, a lot of these newbies in the market, they had no clue like how the stock market works, right? So they were getting all mad. Worst management team ever. And I'm like these people have no clue like what they're doing in the stock market. It's so sad. And they're just gambling money out there, right? And if you understand anything, like you understand this is a damn actually really impressive management team at Celsius. Like 5-6 years ago, Celsius was a penny stock that no one cared about, right? And now they're growing this company into becoming a drink giant. It's unbelievable what they've been able to pull off at this company, like nothing but respect. But it's just funny like watching people that aren't very educated on this. But if you want to get a little educated on this, go to your local Target, because I've seen this brand many times on the shelves at Target. Target always caters a little bit more to the female demographic, I feel like, than the male demographic. And you'll also find them in Walmart as well as some convenience stores. But Target, you're going to find heavy sections, and this is from a partnership they did. I believe it was this past year. They did a partnership with Kim Kardashian for a Kimade energy drink, essentially. And they'll do partnerships with a lot of different female creators and whatnot. But go to your local Target, and you're going to find the product on the shelf. And what's interesting is the product, guess where it always seems like it's right by? It's right by Celsius. Right by Celsius. Look at this, another picture. Look at this. Alani right there, Celsius right there. Alani, right there, Celsius right there. The product is right next to each other many times, right? But like I said, the difference between this brand and like Celsius is Celsius seems to be more of a 50-50 demo where, it seems like about half the people that drink it are guys, half the people that drink it are females. Alani, a little bit different, where it seems to be extremely heavy, really geared toward females overall, right? Now I was doing a little digging on this whole Alani situation, okay? Alani, I'm going to stick with Alani, okay? I did a little digging here, and here's something I found back from 2023 while I was doing some digging. So this is interesting. I posted this inside the private stock group. It said this company, a drink and snack maker, founded by personal trainer and social media influencer Katie Hearn, is exploring options that include full or partial sale of the company at a valuation of more than $3 billion. So that's interesting because that was back in the summer of 2023. They were exploring ideas of selling this company, but they were talking about at a valuation of more than $3 billion. Celsius just paid $1.8 billion. So it looks to me like Celsius got about a 40% discount versus what they wanted to sell this company for a year and a half ago or so. That's, I think, pretty intriguing here, right? Now, I also found this here, and this was talking about, keep in mind this was a private company, so it's hard to find some of the financial information around this company, but I did find this. Back in 2021, it was announced, they must have let this out to the public, that they did $228 million of revenue. And that was a major growth rate from 2020. 2020's revenue was $68 million. So there's no doubt this is a very fast-growing brand. Now, word on the street, and I still have to confirm this, so do keep this in mind, but just word on the street is this company's been doing close to $600 million of revenue now, which is not a small number. It's actually a very impressive number for this company, considering, just back in 2020, they were doing $68 million. So if this is true that this company's been doing, recently around $600 million of revenue, that's incredible. That's like a 10x on revenue in a matter of a few years. That's not bad, right? Not bad at all. So this is actually a really, really interesting acquisition they're pulling off here, essentially, right? Now, if you know what I've been up to here, I've been buying Celsius and Monster stock, and I've basically been putting about $2 for every dollar I put into Monster, right? I put into Celsius. And as of tomorrow, so we were up $1,500 on Celsius going into these earnings, but as of tomorrow, we'll probably be up $30,000 to $50,000 is my guess, depending upon how much Celsius stock goes up tomorrow, right? But what's really fascinating here is since I own Celsius and Monster, I'm going to now own Celsius brand, this Alani brand, Monster, Rain Energy, Bang Energy, and plus Monster owns a bunch of other like smaller brands essentially. So the way I kind of think about this now is basically almost every other time somebody walks into a Target, a Walmart, a convenience store, a food store, and goes to buy an energy drink, I'm going to be making money off that. That's crazy. That's crazy, right? But if you add up the market share that Celsius has, this Alani company has, Monster has, between all their different brands, it adds up to basically about half the time an energy drink gets purchased, I'm going to make money off that. That's wild to think, right? So, I guess the only enemy is Red Bull in the end, right? But that's incredible to think like that, right? Now, the other thing you got to think about with a deal like this, and something I consider, is why didn't Monster, Pepsi, or Coca-Cola go ahead and, buy this brand? It was for sale, and it was for sale potentially for quite a while, right? Why did they not buy it? So when it comes to Monster, I think Monster probably didn't want to buy them because Well, one is Monster already has so many different brands they already have to worry about, right? But I think another reason is Monster is not super strong when it comes to like the fitness community. Monster is much more heavy into, I would say, kind of like the worker community and, folks that might be looking to go out or things like that, right? And so I always felt like that's kind of Monster's strength is kind of a little bit more there, where Celsius strength is more the fitness market and kind of like lifestyle, right? Which is also this Alani brand is as well. Now, additionally, this Alani brand, right, is very heavy female demographic. And if you think about Monster traditionally, what do we think about? Like very heavy male demographic. Like if I think about who's drinking a Monster, like I get a mental picture of the guy playing Call of Duty Black Ops 6, okay? I get a mental picture of the landscaper who was coming in and buying 2 Monsters at a time when I was working at Quick Trip, right? And the next landscaper, and the next landscaper. And I get a mental picture of the construction worker who's coming in to buy a Monster. That's a very different picture than somebody I imagine buying a Celsius. And it's certainly a very different person than I imagine buying an Alani, right? So I think Monster might have just kind of looked at it as like, hey, this is not our strength. Like we sponsor like UFC fights. Like we sponsor monster truck rallies and like dirt bike races and stuff like that, right? And like we'll sponsor, I don't know, a skateboard competition and a BMX competition. Like that's Monster. That's where they play. So the brand probably just didn't line up super well with them. That's kind of my opinion on that. As far as Coke goes, I don't think Coke would want to just own that brand straight up because they have their major investment in Monster. So they would probably look at Monster and be like, if you guys aren't going to buy it, we're not going to buy it. Like, because we would want you guys to run it. Because Monster or Coca-Cola owns a significant portion of Monster. I believe Coke owns around 22% of Monster nowadays, or somewhere around there, roughly, right? And so I don't think Coke would just want to stand alone buy them and be like, we're going to run this energy drink brand when you guys are an energy drink company. Like, it doesn't make sense. Pepsi has the ownership stake. They own, if I recall, it's a little under 10% of Celsius, right? And so I don't think Pepsi would want to buy that brand straight up when they would say, why not you buy Celsius? Like, you guys know how to target more of the fitness, lifestyle type consumers. You guys know how to sell to females really well, right? Like, you guys can handle that, right? And so at the end of the day, like, I just don't think it lined up very well for these other 3 big brands. And there's Celsius right there. And I think it was just kind of a perfect scoop up for them. Second stock of these 4 stocks that's an incredible opportunity is Cheesecake Factory. Oh my gosh. Is this story getting better and better by the days? Oh, it's getting so good, folks. Now we're at $45,000 in the stock. Does not include dividends. And I'm telling you, I got so much more money to make in the stock. It's ridiculous. This is one of the most underlooked opportunities in the stock market. I understand the stock will be approaching all-time highs here very soon. But even when it does hit all-time highs and breaks through those all-time highs, I'm telling you, the stock is still a deal. Their income statement was an A- income statement, $920 million of revenue versus $877. They kept all their costs in check. Almost all their line items for costs, other than G&A, pretty much went down on a year-over-year basis, right? Food and beverage costs and labor expense, like as a restaurant chain, that's where you spend your money. Food and beverage and your labor, right? And both of those dropped as a percent of revenue. Very impressive. Additionally, if you look at their income from operations, it went to 5.1%. Whew, that's versus 0.9%. That's a really good margin for a restaurant chain. Additionally, net income went to 4.5% of revenue. That's impressive. So 4.5% net margin, $41 million plus of net income here in the quarter, and 83 cents of diluted EPS. Very strong quarter for Cheesecake, and it just gets better and better and better. Now, additionally, I was pointing out this in my private stock group. I said, Cheesecake's got 215 restaurants, owned restaurants. North Tally's got 42 so far, Other FRC 48, and then Other is 43, which definitely incorporates into the Flower Child, right? But something that's crazy, when you listen at a conference call, they were talking about like 11% Flower Child comps. That's ridiculous. Like, it's hard to find anybody else other than like Cava that's got a brand that is growing comps 10% plus. It's ridiculous. And that's what Flower Child's doing right now. So this I'm telling people, like, this flower child opportunity might end up being bigger than anything the company has right now. And that includes Cheesecake Factory. And that includes North Italia. And that includes all the other concepts they have that they're going to be growing immensely over the coming years. Like, flower child might be bigger than the whole company. I'm not joking. Like, what I'm seeing there is shocking. 11% comps year over year. These are crazy numbers. And the craziest thing with the flower child business is how profitable it's likely going to end up being long term, because it does crazy to-go business. We're talking like half the businesses to go, roughly, is what they were mentioning. It's not a small number. It's a massive number, like significant. And it's a perfect brand that's set up well for Uber Eats and DoorDash, right, and Grubhub and all those. And right now they're not even using many of those. The only one I believe they're using as of right now is, I believe right now they're exclusively using DoorDash. But I wouldn't be surprised if Flower Child expands to all the delivery platforms over time. And when that does, like, I'm telling you guys, this Flower Child brand is no joke. Like, if you want to look for like the next Chipotle, the next Cava type opportunity, keep an eye on Flower Child, okay? Now, the company also mentioned they're going to open as many as 25 new restaurants in fiscal 2025, including 3 to 4 Cheesecake Factory restaurants, 6 to 7 North Italia, 6 to 7 Flower Childs, and as many as 8 to 9 FRC concepts. They also have $84 million of cash. My thing is, and I'll be honest with you, if I had one thing to pick at the management team, if I had one thing, we need to expand Flower Child faster. This management team has to get very focused on expanding Flower Child specifically at a much greater rate. I'm talking, we've got to get to a place. I want to see them open 25 Flower Childs alone in 2026. I think the management team has to fundamentally relook at Flower Child and how crazy big this opportunity is with Flower Child concepts specifically, with these 11% comps, and be like, we got to hit here. Let's put max resources behind this. I am to such an extreme extent, I wouldn't mind if they cut the dividend completely just to expand Flower Child as quickly as possible. This is such a massive opportunity for the company. I don't want them to move slow here. We need to move fast. And so, if you told me I got, a half hour to talk with the management team, that's the only thing I would tell them. I'd say 6 to 7 Flower Childs in 2025, fine. But I'm talking future years. I want to see 25 Flower Childs a year alone. We can do it. The team can do it. I think they can pull it off. But they gotta accelerate growth massively when it comes to Flower Child, and put a lot of resources, as many resources as possible. Because I'm telling you, that's the biggest opportunity in probably the quick casual space, probably since Chipotle and Cava. It's behind those ones. It's a big opportunity, right? I would anybody that either owns Cheesecake stock or cares anything about it, listen to the conference call. The conference call was phenomenal. Give you so much valuable information. We have it up on 1000xstocks.com, and you can adjust the speed if you want to listen to it at 1.5x or 2x speed or whatever. Listen to the conference call. It was a great conference call. By the way, completely random, I'm thinking about potentially getting custom steel cards made for lifetime members of the private stock group 1000x. So I was looking at designs and things like that. I don't know. We'll see. Okay. Next one up here that you got to buy is Meta. This one I'm not actively buying, whereas Celsius I've been actively buying Cheesecake. The only reason I'm not actively buying Meta is because I already have so much money in it. It's ridiculous. The public count alone is $1.11 million. Never mind, I own the stock in other portfolios as well. So, for me, I'm good on Meta. But with that being said, it's still a buy. And you might as well get it while you still can get it under $1,000, because the stock won't be under $1,000 forever, in my opinion. Looking at the income statement's a 101, the balance sheet's a 101. I mean, it's just a crazy beast of a company. And so this is one, if you don't have a position, you might as well build a position. Get it while you can get it under 1,000. Because, I wouldn't be surprised if in the next 12 to 24 months, this one's over $1,000. And then we're going to be talking about the stock moving to 1,500, and then we're going to be discussing the stock going to 2,000. And so it's you can either buy it at 600-700, or you can be buying it at 1,000 not too long from now, or you can be buying it at 1,500 not too long from now, or a few years from now you can be buying it at 2,000. It's up to you, So that's just one that's a buy and a buy and a buy. Fourth stock of these 4 stocks is which is one I spoke about on this video here. 6 stocks I'm buying now, February 2025 edition. I believe one of the other stocks I also featured on that video was Celsius, if I recall, right? Been banging my hand on the table in regards to Celsius, and dang, I think some folks have been doing pretty good in regards to that one. Oh my gosh. But yeah, you know, if you want to hear me talk more about AMD, definitely check out that video. And also, if you want to hear me talk more about AMD, not sure how many of you guys follow me on the Reaction channel. It's called Jeremy Lefebvre Makes Money. But I did this video here. It's got 79,000 people have watched it so far. I released it 22 hours ago, right? Which is crazy because that's more views than I have subscribers on the channel. But I talked about AMD and Palantir in that video. But AMD, I reacted to a great video in my opinion. So if you want to hear that reaction, talking about AMD's $200 billion AI opportunity, you might want to check that one out. If you care anything about AMD stock, it's definitely worth a watch, right? As I always do, I put my money where my mouth is, right? I was out there buying AMD stock here today. I bought another $8,771 AMD, right? Because I think that's going to be worth a whole lot more than $8,700 in the future. And so my AMD position is getting pretty darn big now at this point in time. I also made some other buys out there today. I bought another $9,500 of Cheesecake. I bought another $17,000 of Nike here today. I bought another $10,000 of Estee Lauder here today. And then remember, I sold those Walmart put options here today, right? Now, next up here, I'm going to be buying stocks tomorrow. Are you buying stocks tomorrow, right? I always tell you guys the number one most important thing to being a great investor, before you worry about income statements, balance sheets, cash flows, SWOT analysis, PE ratios, anything like that, portfolio management, the number one thing is always have more income than expenses, right? And if you have more income than expenses, you can be buying at least once a month. I always tell you guys, be ready to buy stocks at least once a month. And as long as you got more income than expenses, boom, right? And if you don't have more income than expenses, then you got to get focused on how you get more income than expenses, right? Unless you're like retired and you're a millionaire or multimillionaire, like, okay, at that point, it doesn't matter, right? But for 99% of people out there, they're not in that sort of financial situation. So it's all about more income than expenses, being in a position to always buy. And who cares? Stock market crashes happen, corrections happen. Who cares? It's going to be a million of those in the future. That's just the way it is. The moral of the story is you got to get invested. You got to get building out positions in great companies that you love for the long term. And the rest of the drama will be the rest of the drama. Who cares? Tariffs come, tariffs go. Presidents come, presidents go. Income taxes go up, income taxes go down. Blah, blah, blah. The world keeps moving along. You got to keep building your portfolio, okay? All right, guys, appreciate you joining me. As always, thank you so much for being here. If you're looking to apply to join a private stock group, private wealth group, and get access to 1000xstocks.com, I can bundle all that for you together. You can click the pin comment down there, fill out a form, see if you're a good fit to join us in there. Access to all my premium courses, including Become Master Stock Market Millionaire Playbook, Stock Options Mastery, Dividend Investing Mastery, Financial Statements Mastery, my Valuation Mastery, which is a big help. Pin comment down there. Much love and have a great day.